Hello guys, I think we are live now. So there are 3 watching now, so which is very good. Hi Banaba, how are you? So we just begin, and as I can see right now, there is no one who is watching right now. There is 0 watching, so I will be just waiting just a few minutes until we see people coming, and then we can begin our talk. Oh, we have 3 watching, 9 now. Okay, I see only 3 from my dashboard. I see only 3 guys. Okay, Bassam Muhammad and Benaba Muhammad. Where are you from? It looks like you are from Algeria or something like that. Hi Masin, Malo, how are you? So I see 3 people watching. Right now it's 7. Okay, it's good. 7 people. So I will be just in a few minutes talking about the subject of today, which is, okay, there is a mixture with the subject with the other subject. The subject is how to control risk in trading stocks. Okay, this is the live stream of today. So we have 9 watching. Okay, so you are from, okay, Benaba is from Shlef, from Algeria. The other one is from France, Massin, Malo. What about you? Where are you from? I am from Algeria as an origin, but I am in the USA right now. So how to control risk in trading stocks? This is what we should do. Today. What about you? Where are you from? I am from Algeria originally. Okay, but USA now. Okay, in Algeria we have a small stock market with 6 companies, but that's it in Algeria. So we are speaking right now about how to control risk in trading stocks. This is a live stream. So our main concern for this live streaming is how to control risk in your trading stocks. First, what do you mean by risk? Okay, now risk is all the expenses of your business when you are trading stocks. Okay, this is the risk. It can come from many things. Risk, it is not only for most of the people. When we say risk, people, they think it's just stop loss. No, stop loss, it is not the only thing, the only part of risk. There are many parts of risk as a whole, and in this session we try to elaborate this subject and giving you more information on what we think risk is. It says it is a good subject. Yes, because if I tell you that controlling risk is trading, if you don't control your risk, you can't make money consistently. It means you can just at random buy a stock. You do nothing. Few days it goes up. You make money. You think that with this you become a professional trader, and this is not true, because in other trades you want to do the same, and you will begin to see that you are losing a lot of money, and you don't know why you succeed at first and you lose now. So risk is a lot of things in trading. Oh, it's not Sunday. Hey Pablo, I have been mistaken. I put Saturday on the date, and I say Sunday in my when I send emails. So I am confused myself, so I have a lot of trouble making mistakes as usual. So sorry for that. Yes, I know it's not Sunday, but right now it is Saturday around 10:15. Okay, we are going to go to Sunday right now in 1 hour or 2 hours. We will be in Sunday, so don't worry about this. Okay, so I'm just mistaken in the date. I say Sunday, but I mean Saturday. But the date I put is 29. This is the problem. Okay, sorry Pablo. I apologize for this mistake. Okay, so no problem with this. So we try just right now to focus on risk. Now, one of the main risks that you will face is you don't know how to trade. This is the first risk. This is just before you even trade. But a lot of people, they ignore this. Okay, they ignore that they don't know how to trade. But what they do, they try to go and trade and spend money and doing the strategy of beginners, which is called this strategy. It is called hit and miss strategy. It means sometimes you make money, sometimes you lose, sometimes you make money, sometimes you lose. At the end of the year, you will find yourself a big loser because you have lost a lot of money and you didn't make money. Okay, it's okay, I forgive you. Thank you, Pablo. Thank you. You are a very nice man. He forgives me for my mistake. Thank you very much. How do you scan? Hi, Shindy. We are not doing scanning stocks today. We are doing how to control risk. We are speaking about how do you scan a ticker. Okay, yeah, a ticker. Shindy, there is a stock screener that we use with some criteria, and this is in training level 2 called how to search for stocks using stock screener. Okay, and this is something specific with my criteria, so you will not find this online for free. So this is a paid service. This is the second training in my course, so you should go there to my website and just click on that training, and you get 65% at this discount, and you try to go through it, and then you send me an email when we have more questions. Okay, but in this session we try to do risk, how to control risk in your trading. Okay, this is the big subject of today, so try to ask me questions about risk in this session. Training level 2. Hello all. Hello Martin. Okay, this is my oldest student from Belgium. Okay, he's a very nice man and he is doing good business. So we said that the first risk in your trading is not to know how to trade. This is a big risk. But most of the beginners, they don't know this fact of being at risk of losing money. But they do it by themselves, thinking that trading stocks is like a gambling thing. Just you buy, you lose sometimes you win, that's it. And they don't understand that this is a business. Okay, so it is a business. When you run a business, you shouldn't let luck or what we call gambling mind. It means you are just going to gamble in trading stocks. Now in our business of trading, we are not gambling. We are doing some kind of business that we can make money at the end of the year. So we are not doing gambling, like when you throw your money in buying a gambling ticket, and then you will see if you succeed. You understand that in gambling, that you have millions of chances you don't succeed. Each time you do it, millions of chances you don't succeed. So the probability of making money in gambling is not something that the people can rely on to do business. Okay, but for us here, risk, as I told you, the first thing is not to know how to trade. Now, what I propose for this risk is to go through my training, and you try to eliminate this risk by taking a training and by following instructions. It's a very simple instruction how to search for stocks, how to select the best one, how to do stop loss, how to follow stocks, and the account management and the other things. Okay, this is the solution for this problem. It means you should learn. There is no other way. Okay, you can do it by yourself, but you can stay 5 years, 6 years, 7 years just losing money. Okay, instead of spending many years do it by yourself. You don't know what you are doing. You don't know when to enter, when to exit. You don't know nothing about trading. Just you follow some ideas here and there. Why not to begin with a clear vision about what to do before you trade, and when or during trading, and after you finish trading. Okay, this is the first risk. Now this is the first risk, as I told you. Let me grab some coffee and then we can go to the second one. Okay, so the second type of risk is the stop loss. It is just one of the risks. It's not all. Okay. Most of the beginners, they don't like to control the risk. Now, what we mean by stop loss, we mean to control how much you lose. Now, why? Because you should decide and control what the market will take from you. It means from your money. So in order to understand this, if you ask someone, just an example, okay, like electrician or anyone who you ask to do something in your house. Now you tell him the problem. Let's say you have electrical problem with electricity, and then you just ask him to fix the problem. Okay, he fixed the problem, and then you give him a blank check, you sign it and you give it to him, and you say, okay man, take whatever you want. So do you think that this is a reasonable thing to do? Now you told me, no, I will never give him a blank check with my signature, because he can take, maybe maybe his money he's asking is $200 or $500. He will put $2,000 or $5,000. Okay, so he takes more than what you think he will take. So what is the solution for this? because you know the solution in real life, you know. But the problem, when you go to stock market, you think differently. Trading stocks is a real thing. It's like real life. You should control what you spend. Now, why is that? Because the market will take more if you don't stop it. If you don't stop the market and the stock is going down, it will take more than you expect. Okay? So hi Mukhtar from London. Thank you being with us. Do you have some favorite candlestick formation to trade in combination, for example, with volume? No, I don't have. It should be a normal candlestick, okay? And the volume, you know, it depends, okay? I will just give you an example. A stock that it is $100 a share with 100,000 volume is not the same as a stock with $1 and with 100,000 volume. Although these two stocks have the same volume, but you find that in penny stocks, the bid and the ask is very wide. Okay, it's very wide. So it's not the volume. The volume changes, and you should see the bid and the ask in order to understand the volume. Okay, but for me, always most of the time I use 1 cent from the bid and the ask spread. 1 cent. Let's say, for example, the stock, the bid is $20. The ask will be $20, 1 cent. If it is 2 or 3 or 4, yes, it's okay, it's accepted, but don't go far away. Don't have, for example, a stock that it is $1 bid and the ask is $1.10. Do you know what does it mean? It means it is 10% of your money. If you want just to sell, you will lose 100%. You will lose 10% of your money. Okay, so understand the bid and the ask. And I have put 3 videos in training level 2. I think Martin, you have training level 2, and you just go there and you watch these 3 videos about the bid and the ask. You will understand more. If you don't, send me an email, as you know my email, but I will write it for other people. Okay, send me an email and we discuss more. Okay, because this is specific about the training, so I'm not going to explain things about the training. But I will try to explain a general thing about my strategies. What do you think of gold and silver when or if you go to war with North Korea? What will be the outcome? I have no idea about what will happen to gold and silver if we go to a war with North Korea, or what the market what will happen to the market. I have no idea. For me, if there is no money, I am out of the trade. That's it. Or if the stock market is going down, I can use training level 18, which is how to short the whole market. I short it because everything is going down. Okay. Hey, Jupiter from Singapore. Hey, it's very good that we have Europe, we have America, we have South America, and we have Asia. It's very good that we all together come and join and ask questions. It's very good. Okay, let's go back to our risk. Now, I say the second risk is stop loss. Okay? You should control your trade with a stop loss. You should just give the market what you want you to give to the market. I give you an example. Let's say the stock is $20 and you put stop loss at $19. Okay? Just an example. Now, see a trader, the difference between two traders. One, he puts the stop loss, the other he doesn't. Now what if the stock goes down to 19, to 18, to 17, to 15 after a few days? Now the first one, he will exit at 19 and he will get rid of the stock, and he has all his money in his account. He loses a lot, he loses little money, yes, this is part of the game. But does he lost a lot, or does he lose a lot? No. Now the second guy, the stock was 20, after a few days, 1 week or two, it goes to 15. How much he lost? He lost 25% of his money. Believe me, if you follow this pattern of losing 2 or 3 or 4 trades, you will lose all your money in few months, and at the end of the year you will have no money to trade. Okay? So stop loss is so important in trading. All the beginners who think that that stop loss is just something added, it's not important, they will be punished by the market. Okay? Because if the market is going down for a stock, maybe there is a mutual fund who is selling millions of shares of this stock. He doesn't want this kind of company. Okay? He wants to sell, either because he doesn't like, or just because he wants to take profit because he was in 1 year or two. He wants to get rid of this stock in order to replace it. Now you bought the stock, you don't know what's going on in the market, and the stock is going down. The second thing about dangerous thing is hedge funds. Hedge funds are traders who have millions and millions of dollars in their account because they trade for the rich. And suppose he take a stock that it is very weak and he try to short the stock. You can't stop him. If the stock is 20, it goes to 15, you lose 25%, and the stock will never go up in the future. Even if it goes up $1 or $2, you are losing too much. So you should control what you expect to lose always in each trade. Okay? Hello Zorba, how are you? The second guy got married without losing stock. Okay, anyone has some prediction on Sunag stocks? Okay, here, excuse me, Dragon, we don't do predicting in our strategies. Okay, so I will write it here. No predictions on stocks. No predictions on stocks, Dragon. Now why? Because we use a signal. When we find a signal in some stocks using Stock Screener, we buy the stocks with some criteria, and then we follow them. We don't care about someone has an opinion, okay? Because the opinion, they change. Sometimes someone says the stocks will go up, sometimes someone else say the stocks will go down. But does anyone know the future? No. So why you predict? So stick with the signal as my strategies goes is better. Okay? Now what we have offshore drilling, do you think oil will grow? Okay. Oil and gas have been going down before, like for 1.5 years, and then this 6 months or 8 months, they have a big trend. So it depends if it's still going up. But understand that we don't see the whole thing. We don't see the whole market. We are not interested in the whole market because we don't buy index ETF. We are buying stocks. Stocks have no rule with the big market. Sometimes the market is going down and I or you buy stock and it's going up. So there is no relation at all. Okay? If you are looking for industries, yes. But still, if you go to stocks, you will find that they are so different. In oil and gas, or you will find they are different. Now why? Because it depends on whom he buys a stock. Sometimes a mutual fund, he chooses a company, oil company or drilling company or service company, and he buys it heavily. For 2 months or 3 months, you see the beginning of the trend. So this has nothing to do with other stocks or in oil. Maybe all the other stocks are going down. So we are following individual stocks. We are not following the whole market. Okay? If the whole market is going up and I buy a stock that it is going down, what's the deal with that? Okay? You are just wasting your time with big indexes. You should look at stocks, solo stocks as I call them. It means each stock, when it is bought, it's going up. So we buy it, we make money. So we don't care about the market if it's going up or the whole market, because you can't be in the whole market except when you buy the if you are following, for example, the whole market, you should buy ETFs. Okay, you buy ETFs. For example, the Dow Jones, if you like it and if you see that it's going up or something, you go to ETF, it's ETF DJIA, and you buy that ETF that tracks the index of Dow Jones. Okay, so make sure that you understand the thing. We are not looking at the whole thing. We are looking at individual stocks to make money from them. So they have no rule with the general index. Okay, so since we are talking about controlling stocks or controlling risk, we have spoken about the risk of not knowing what you are doing. It means you don't know how to trade. This is the biggest risk. Second risk is when you begin trade, you don't know how to control your stop loss. Okay, and this is one of the biggest issues with beginners. They say we don't put stop loss because the stock can go down then go up. But who tells you that the stock which go down will go up? This is just presumption. This is just a false idea that it is in the market. That's why if you lose a lot after 1 week or 2 or 3, you lose 25% or 30% or 40%. What will happen to your trade? You lose a lot of money. And that means hedge fund make the rules somehow. No. It doesn't mean they make the rule. No. Sometimes a hedge fund is selling another guy who is bigger than him. For example, he is a mutual fund. He is bigger than a hedge fund, and he buys what the other sells, and the stock will go up and the other loses. It doesn't mean that someone will be always the bigger or the biggest. There is no such thing as the biggest, because you find a mutual fund is buying, maybe someone who is big also he is selling, and the one who is strongest, he will make the rule. So in the stock market, it is the people who have more, and they go in the same direction. As we have seen in the bubbling, when we have a bubbling in the market, could you make one day a video on your daily routine where you comment a bit on what you looked after on selecting a particular stock, new highs, benchmark? Oh no, Martin. I don't use what you are talking about. Benchmarking the sector, industry, direction. No. I'm just explaining to you. I don't look at the whole market because I can't. Okay, I'm not going to see the indexes, to see the industries. I'm looking to do my strategy. Is to do stock screener, the stocks that are good according to criteria. I have some criteria, I buy them, and I will be waiting for tomorrow or next day to see what's the result. If the stocks go down and they are not good, they will be facing my stop loss. I exit them, okay? Because no one knows the future. Now, if the stock is good, I will be staying until I make that much profit, and then I sell it according to some kind of criteria. And all these, I think, Martin, all these is in your training levels by videos. You have them. So you just go through them and you do the same. So I'm not going to see what happened to the Dow Jones, what happened to the Nasdaq, what happened to the other things or to the other industries. I don't have that much time to go to do all this. Okay? I don't care about all these things. I care about single stocks, individual stocks. The end of the day by limit price and stop loss order, and maybe commenting along the way. Oh yeah, okay. See, Martin, today we are doing what you call risk in trading. Okay, so the whole subject will be that. I will answer some questions here and there. It's okay. Shamro, can I buy your training from India? Yes. You have a credit card or a debit card, or when you use online, yes, you can. And I have a lot of my students are Indian. They are from India, a lot. Okay. They if you can't buy, for example, I know the currency exchange. I know that rupees are less than $1, but you can for example buy ebooks, which is 80%. So I will give you the website. You just go there and check the ebooks. Okay. So just a reminder, the ebooks are 80% discount. Okay, and videos are 65%. This is for you, Shamro. Okay, Robey, Martin, maybe coming along. Okay, the end of the day. Okay, Martin, see how I work. Okay, let's say I have 5 stocks or 10 stocks in my account. They are running. Now, let's say I sell one stock. What should I do in that day when I sell that stock? Either by stop loss or I sold it, for example, I have high profit with gap apps, for example. Let's say I sold the stock in the morning or in the day. So what should I do? I go to stock screener. I use my 2 criteria that you have in the training. I find stocks, a few stocks, because I don't want a lot of stocks, because I only want to buy one. And then I put them in the chart and I use my criteria, which is training level 4, and then I go through them through 1, 2, 3, 4, 5, 6. Now let's say I find a stock. Okay, I just go, I have that money that I sold the stock of. I took that money, I buy the new stock, and I put stop loss. Okay? And I close my account. That's it. This is what I do each day. Let's say a day or 2 or 3, my stocks are going up. I don't have any stock that it is sold. What should I do? Nothing. And this is the good thing about swing trading, is that when there is nothing to do, you should do nothing. There's nothing to do. I'm not a day trader that I should each day I wake up early in the morning at 7 o'clock or 6 o'clock. I see the market, I see the news, No, this is not day trading. This is a swing trading following signals. I don't care about what the market is doing. What I care is about my stocks. Are they going up? Yes, I am making money. This is what is important for me. So this is what I do always. Okay? If I sold the stock or 2 or 3, I replace them. That's the way I do business, and that's the way I make money. Okay. at the end of the day by limit price. No, I don't use limit price. Yes, yeah, I limit the price, but I use a stop order. I don't use limit order to exit, to do stop loss. That's why I say stop. When the market goes to your stop price, it becomes a market order, so you exit from the trade. Automatically, you don't do nothing. Okay, this is the way I trade. Now let's go back to our risk. Let's drink some coffee, then we continue. Hello, Dragon Lord. After put in the stop loss, are the stocks guaranteed to get sold? Yes, most of the time. See what happened when you put a stop order. A stop order, when it reaches the price that you are putting the stop price. For example, I give you an example. You buy a stock at $20. Next day it is 19, and 19 is the stop loss. Now the stop loss becomes a market order when the market reaches $19. Now it is sold with whatever price available in the market. It could be 19, it could be 18.95, it could be 19.80 cents. So yes, 18.90 cents. It depends what is the available, and it depends also on the stock volume. So that's why you should always buy stock that have a high volume. At least when you want to exit, it will be easy for you to exit. Okay, don't go to a stock that it is 10,000 volume, or 5,000 or 20,000, and you bought 10,000 shares or something, like penny stocks, and then when you want to go out, they will give you a bad price always until you sell all the stocks, until you sell all the shares that you have. So try always to find stocks that have high volume. This is a recommendation that you should do always. But yes, it is guaranteed, but the price, it is not guaranteed the price. When you put, for example, $19 for stop loss, there is no guarantee that you get 19, because it depends on the market, on the volume. Sometimes there is no buyers for your shares at that time, so they want your shares lower than 19. They can get them for 18.95 or 90. It depends on the market, and you will see that in your account. And you can't ask your broker why, because this is the market. Okay, it's the market, it's the volume, it's the stock you are in. Okay, a stop loss, is it a percentage? Example 2%. Okay, Zorba. Stop loss is a tricky matter. You should understand the whole picture in order to understand the percentage. Okay, the percentage depends. Sometimes two stocks with the same price, but the percentage will be different. Why? It's just because the stocks are different. All this I teach in training level 6, so it's a long training. I think it has 25 or 28 videos. It explains everything into details. One of the main reasons is that it has details. You should learn about stocks kinds. You should learn about your risk tolerance. You should learn about volatility. You should learn about a lot of things. Now these things are in training level 6, how to calculate stop loss. Training level 6, how to calculate stop loss. It is detailed. It is a detailed training that you should go through and you should study. Or if you think it's the videos, you don't like videos, you can buy ebooks which are cheaper. Jupiter, do you take qualitative information into account? For example, potential big changes in technology? No, I don't use news I don't use financial statement of the company. I don't care. You know, if I know how I trade, you will be surprised. I see only the ticker. Okay, I know the industry, for example, it belongs to, because I see it in the chart, the chart I'm using, but I don't care which is this company. I see only the ticker. I don't care about the name of the company. For example, Facebook is FB, so I always see FB. I don't care about Facebook or whatever it is. What I care is it good for me to buy according to my criteria and my signal? Is it yes or no? If it is yes, I buy it. If it is no, I don't. And I don't care about fundamentals or the financial statements as in investing. I am not doing investing. I'm just staying few days or few weeks. I make some money with the trend and then exit the trade. So I don't care about this company if it is doing good or bad. What makes me, what's the thing that it is important for me is to buy the stock when there is a signal, when I think that there is a trend coming. Now, I buy and I wait. If the stock is going up into a trend, I am right. So if you are right with the market, you will be making money. And this is swing trading. This is what we do, and this is how we make our money. What high volume in your opinion? Okay, high volume, you should see it between the bid and the ask. Go any stock. For example, 10,000 volume is not good because the volume is so low. Okay? Try to find higher volume. Whenever you go to bid and the ask, you find it 1 cent or 2 or 3. It means generally 1 cent. It could be 1 million volume, 2 million, 3 million, 5 million. Depends on the stocks. So there is no rule for a number. If I tell you, for example, try to choose 1 million volume and the stock is 1 cent. If the stock is only 1 cent share, 1 million, it's not that good. Okay? But if I tell you the stock is 1 million and the stock is $50 or $70 or $100, yes, it's good. 1 million, 2 million, 5 million is a good thing. How do you know the best sector to buy stocks? Okay, Shibuki, where are you from, Shibuki Ashi? Where are you from? So I want just to know from where is this guy, because he says, I put his name, Shibuki. Hope I pronounce his name well, because I don't know from where he is. So he said, how do you know the best sector to buy stocks? Now, we are not buying from sectors. We are buying stocks from whatever sector, whatever industry, by using stock screener. We give him criteria, and the stock screener gives us these stocks that we are looking for. And then we put them in the chart, and with the other criteria, we try to choose the best stock. Now, if you want to know my strategy, how I do it, how I find stocks. Oh, from Nigeria. Okay, if you want to know how I do it, you should go and check training level 2. How to search for stocks. Training level 2. How to search for stocks using stock screener. Okay, now there is a stock screener, and there is another for international stocks. Okay, you will find the website with my criteria, and then you go to your country, and then you find the stocks daily. And my website is for getting the training is training level 2. Okay, you can see if you can see videos or you can go down the website and you see ebooks. You can buy whatever you want, and then you will find my way, and then you try to practice, and then if you have questions, just send me an email. And this is my email as usual. You find it in my website and in YouTube. Okay. Okay. So let's drink some coffee and then continue our risk. So we say the first risk, the biggest risk that you as beginners will face is that you don't know how to trade. And this big risk, you will lose a lot of money because you stay trading. One day you trade, you make a little money, and then a few days you lose, and the other day you do a better trade, but you don't know the general picture of how to trade. You have no idea. You just find ideas in the market, or you find it online, or you read books, and you just apply this mixture of ideas and mixture of strategies. Okay, there are some people when they show you something online, they mean specific stocks or specific thing, and you apply this strategy for other things, and then you will make mistakes. The main thing I'm telling you about this risk, which is you don't know how to trade. Ask yourself just a simple question. By the end of the year, are you making money? Yes or no? If you say no, I didn't make money, I lost money, it means that you have this risk, which is you don't know how to trade. Yes, I bought your trading and it has been working for me. I thought choosing by sectors. Oh yeah. See, if you have used a training level 2, go and see training level 3. You can choose the stocks because of their industry. And this is I show in training level 3. Please go to that training and study it again. It will give you the industry, not the sector. Because industry is very specific for some kind of stocks. And this is what we call industry rotation. Sometimes an industry is going up, you find a lot of stocks going up, you can buy from them. Sometimes when the industry is going down, you just leave it because you will just lose money. After uptrend. Hey Mark Lynch, hey Kareem, when is the best time to apply a trailing stop loss, as the stop advances or later? Okay, for me personally, I don't use trailing stops because trailing stops, it doesn't work with my strategy. Why? This has to do with training level 7, how to follow an uptrend. It means how to follow the stock. If you use trailing stop, and whenever the stock goes up, the stop loss goes up, but sometimes it goes down and it hits your stop loss and you exit the trade, but the stock is still going up after a few days. So you will be doing mistakes with this trailing stops. So for me, I don't use them. I will write here. I will write them. I don't use trailing stops. I don't use trailing stops because you will exit early. So you ask me what you should do. You should see training level 7, how to follow an uptrend. It gives you ideas how to change the stop loss when the stock is going up and you are making money, how to protect your profits, and how to be away from movement of the stock. Because when we buy a stock according to our signal or momentum, the stock afterwards will be volatile. It will be going up and down so good. So you should not put a stop loss there until certain times. And this techniques, skills, I explain them in training level 7, how to follow an uptrend. So you should go to that training and you study it, and if you have more questions, you should send me an email. Okay? So are the stocks advances or later? This is the solution for trailing stops. You don't use them. You lose only a stop loss, and then you change it later. How would you change it? It's according to how to follow an uptrend. Okay, and I can't explain all this. There are about 25 videos or 28 videos explaining this, and the stocks are not the same. Each stock is different from the others, so there is no a pattern that you should follow. But I will give you techniques to use, and they are very easy to use, and it will make you understand how to follow the stock. Now, so we say there is another type of risk number 3. For those who are not here and they don't know in which number we are number 3. We say number 1 is the risk of not knowing how to trade stocks. It means if you don't know how to trade stocks, this is the biggest risk that you face. Second risk is trading risk. It means the stop loss. You don't know how to use the stop loss, it's a big risk. Now we're on the third risk. Kinds of stocks. Penny stocks and common stocks, they are not the same. So the risk is not the same. So the stop loss is not the same. The risk is not the same. So I will explain this. What's the difference? I will explain. I am guilty of strengthening uptrend stock. I exited early and then it went up again. Yes. Sometimes we do mistakes. You want to strangle the stock, and you want to control the stock a lot, and the stock is volatile, and you put stop loss near because you are scared of your profit, and then you exit. So this is too bad. So you should leave the stock free to do whatever it wants when it is volatile, when it goes up the signal. That's why we buy from the momentum. The momentum is the signal. When we buy from the signal, if the stock goes up, I'm not saying sure 100%, but we are sure to make money because we are right. If the stock is still going up for many days or many weeks, it can be until a few months. So don't be scared to wait for the big profits. Don't be scared. I will see. Congestion pullback, some rest in the stock. Yes, the stock always reverses the direction according to what the trader do, and this is volatile time. So you should never put your stop loss there near this volatile thing, and then you exit, and then you see your stock going up, and then you just waste your time and your money. What to look for after a pullback. Now, the thing is, you should follow the instructions on training level 7. It gives you techniques to show you where to put a stop loss after the stock has been going for 1 week or two, for a few days or one week or two. It will show you where to put the stop loss. Okay? There are techniques. I will not explain all training level 7 in this session. I can't, because it is a paid service, and then they think you have the training. You just go to the training and you look for the information, and then if you have a question about the stock and you can't apply the techniques, you let me know. You send me an email, you say, Kareem, I want to do this technique here and there and doesn't work, so I will help you. Okay? what to look for after pullback. Okay. Now, the third risk is, I say, the kind of stocks. Now, most beginners, they don't see the difference between penny stocks and big stocks or common stocks. They think they are the same. They are just stocks. No. When you trade penny stocks, it means the stocks are under $5, or sometimes even they are bigger, but they behave like a penny stock. Now, what's the problem? Is that they move with a high percentage. Okay? High percentage, it means they don't move with 1% or less. You find the stocks, they go 5%, 10%, 15% each day, either up or down. So this is a problem. This is a problem with this kind of stocks. So in penny stocks, you should give more room to volatility than the big stocks. Okay, so most of the time the stop loss will be bigger or wider than in common stocks. Even in common stocks, you find some stocks that are fast and stocks that are slow. There is a big difference. Stocks that are slow should have a small stop loss, not bigger one. But stocks that move fast, I give you an example. If the stock is in few days, it's moving like $3 each day, $3. Can you put a stop loss with $1 or $2? You can't, because understand that the next day you will exit the trade because the stock is so volatile. Okay, so you need to understand this kind of stocks. Okay, you need to understand the difference between penny stocks and common stocks. And in training level 10, I have training called How to Trade Penny Stocks. I give details about this stuff, that it is different from common stock. On monthly chart, approximate 2 month rest. On weekly, approximately 2. On daily, approximately 2. Lower volume, and then going up again with higher volume, big buyer back. Now, you know, for me, I don't see that the monthly chart or the weekly chart or the what you call the frames, time frames. I see only the daily, and this is how we get the signal, and this is how we get how we find the signal in order to buy the stock. So stocks are different and their movement is different, and how do they go up? They are different. There is no a pattern that you should follow and you stick to it. There is no. So try to leave the stock free. Okay, how do they move? Because you can't control them. You can't put some strategy that stop them from going up and putting stop loss near, and then you exit the trade, and then your stocks will go up and you will just leave money on the table. That's why what you should do should always follow the instructions and the techniques I use, which is in training level 7. Weekly approximate. Now also I'm telling you, Martin, I don't give any importance to volume. The volume for me is only when I want to buy. I don't want to buy low volume stocks. That's it. And the bid and the ask should be most of the time 1 cent. For example, the bid is $20, the ask $20, 1 cent. Okay? This is why I always what I always do. Okay? So I don't use volume in my trading. I always like high volume stocks. I don't care about very low volume, because when you want to exit, it will be difficult, and sometimes this low volume, the volume will shrink and go lower and lower, because there are no more traders in this. So I will check good stocks with high volume is better. This is what I do always in my trading. Now, the third risk, as I told you, in trading is about the stocks themselves. Some are penny stocks. They move too fast with a high percentage. Sometimes the stock is $1, the next day is $5. Okay? Sometimes it is $1, the next day is 50 cents. So they move too much. So you should understand that when you are trading penny stocks, you are doing risky trades. And that's why most of the beginners, because they don't have money, what do? They go to the penny stocks and they think they are easy. Penny stocks, they are not easy, they are difficult, because they move fast, up or down. So all your money that you put, it is at bigger risk than you put them into a bigger stock, where they move just slow. Okay? A stock that it is $100 today, tomorrow it goes to $101. So it's not a big deal. But a stock that it is $1, it goes to $1.50 next day, it is 50%. So you see the difference? It's a lot of difference. That's why they are risky, and you should be careful when you want to trade these stocks. And you should follow my instructions on training level 10, how to trade penny stocks. At least you have an idea what you are doing or how to trade them. So let's take some coffee. So this is for risk. Now there is another risk. Risk number 4 is from your account. Okay? Account, what does it mean? It means sometimes people, they just buy the whole account. They buy one stock. Let's say you have $4,000 or $5,000. You take all your money into account, into one stock. What does it mean here? You are making your account very risky, because you risk all your money in one thing. It's better to divide your account into many positions. I don't tell you how many positions. This depends on the commissions, depends on how much you have. But try not to buy the whole account money, one stock. So you will have more risk than someone who divide his account to 2 positions or 3 or 4 or 5, depending on how much money you have. So put this in mind, that when you put all your money into one stock, you are at more risk than when you have 2 or 3 or 4 positions. This is related to your account. Okay? Now there are risks coming from trading a lot. There are some people they just buy, sell, buy, sell, buy, sell. They don't even count how much money it is taken from their account from their broker. Okay? So whenever you are trading stocks, whenever you buy, a broker takes commission. Whenever you sell, he takes commission. And there is no a tab or a button in your broker showing you how much commission have you done in 1 month or in 1 year. They will never do that. Now why? Because he doesn't want you to learn about your commissions, how much you do, how much you trade. Okay? He wants to let this hidden. The cause for this is because he is living from you. Okay? The more you do trades, the more he make money. The less you do trades, the less he makes money. So for you, you should put down the risk of losing too much money from commissions. And this is one of the biggest things for small accounts. When you have small accounts, when you trade a lot, you will lose almost all your profits because of, not because you don't trade well, it is just because the commissions takes all your money or your profits, as they say. So these are the most important risks in your trading, and to control them you should have a concise strategy, seeing the whole picture, because there are a lot of things that you forgot to include in your trading. This is just ideas, not just the trade itself, because you focus on the trade itself, but you don't focus on your account. So the best thing you can do is you try to train yourself, try to practice, try to ask questions, and never stop asking questions, because the more you ask, the more you get knowledge. Okay? For Martin, for the volume spikes because of big buyers, no, it's not because of big buyers, but it is but because sometimes we have news, and the people, they just buy in order to, they are day traders. They don't care about tomorrow, they care about today. So if there is good news in the stock, or there is good news at the beginning of the day, they always buy, and you see a really long spike, either up or down. If it is up, it is good news, like a gap up. But if it is down, it means we have sometimes bad news or bad thing in the market. So the people, they short the market, or they short the stock in order to make money that day. So they don't care. They don't care about tomorrow. These are day traders, and we are not doing day trading. We are doing swing trading. It means we don't buy because of the volume. We buy because of the signal. Now the volume, how do we use the volume? It's just we like high volume stocks, not to be trapped into low volume, because when you sell, you will sell with bad price. This is low volume stocks. That's why we try to avoid them, and we try to always find stocks with high volume. And how do you know this? It's just you see the bid and ask. If it is 1 cent, it's a good stock. That's true. They would not want to remind us how much commissions can add up. I hadn't thought of that. Yes, Reed Mark, this is a problem. But I'm telling you, if you have a big account, commission doesn't count that much. But if you have small account, you are in trouble. You are in trouble because it will add up during the months until the end of the year, and when you calculate all the transactions, you will find that the broker has eaten a lot of your profits, and sometimes you break even, although you have made a lot of money. It's just the broker who eats all this money. Any pro tips for what, Pablo? Tips for what? So I don't know. Are you talking about commissions or talking about something else? So you should tell me what is the thing that you are asking for the tips. Is it for commissions? Yes, Pablo, are you still here? Hey, Andrit Onizi. God bless you for helping me. Yes, thank you very much. Where are you from, Andrit? Your name is strange. Are you from Europe? What have you learned new this year that you didn't know before? How much return I can expect with 3,000 account? Oh, Albania, I know, it's in Europe. Yes. Marhaba, Kardesh. Kardesh. Marhaba, it's okay. Kardesh, I don't know what does it mean. Yes, I know it's in Europe. Albania, I know it's in Europe. Now, Josie, you say how much return I can expect with 3,000 account. Now, Josie, it depends on you. It depends on you, your level of trading. Okay? It depends on you, on how well you trade. It doesn't depend on someone else. Okay? It is your account. You are trading. If you are a good trader, you can make money. I don't know how much money you can make. You can make 10%, you can make 20, you can make 50, you can double your money in each year. So it depends. Depends on where you are in the market, depends how you trade. Okay? So it depends on a lot of. I thought you are Turkish. No, I'm not Turkish. I am from North Africa. I am from Algeria originally. From North Africa, but in USA citizen. Okay, so I am American right now. Yes, Josie, if you are a beginner, why? It is not a job. It is a business. You should make the difference between a job and your business account. Okay. Now, when you are a job, you try to have money according to hourly rate or salary. For example, you work 1 hour, you get, for example, $10 or $15 or $20 or $30 or $50 or $100, whatever is your rate, hourly rate. Okay, so you know how much you will make because this is a job. When you don't work, you don't have money. But in stocks, it's different. In stocks, you can just search 5 minutes, you find the stock, and you can get 10% or 20% of this trade. And you are sleeping, and next day maybe you have a gap up and you make 8% to 10%, 20%. So don't expect how much you make, because it has a lot of variables. So we will never know. But most of the time it is you. It is you how you search for stocks, how you find stocks. It's your skills. The more skills you have, the better you will be in the future. And I give you an idea. Try to save more money, because 2,000 and 1,000, it's not a big money in the market. So you should have more in order to be able to buy more. Should I get penny or blue chips? Blue chips are too expensive for you. If you have $3,000, stocks are expensive. So most of the time you can see stocks that are maybe under $10, 7, 6, 8, 9, 10, or penny stocks. This is what you can buy. That's why you have problem. When you have small account, you always have problem because you have no freedom of choice. In order to be good, you should have the choice to choose stocks. Any good equities for us to trade when the market reopens? No. See, 8V173133. Okay, all is like numbers. I don't give tips for stocks. All what I give, I show you, I train you how to find stocks. You can see my subscription. and you see how I search for stocks and how I select them. So you should do it yourself. Okay, suppose I'm not here right now, and next month and the other month I'm not here. So are you going to wait until I come back to do your trade? No. So you should be independent from me. You should learn what I know and then practice by yourself. What is the best broker to start with a 50K starting budget and no margin account? I have watched all your videos many times. You teach very well. Are you going to my broker doesn't accept international traders, but you can see, for example, interactive brokers. This is one of the biggest, or you can just compare here in America, compare the brokers which have less fees and less commission. Try to compare. You can check, do what we call a discount brokers comparison. You can Google that. Google discount broker comparison. Discount broker comparison, and they will give you, for example, the fees and the commissions and the other stuff. Okay, or if you find in your country, I don't know about your country, if you have a big market, yes or no, I don't know, I have no idea about Albania. So you can check there if you have a good broker. At least you can call them, or you can call them, or you can go to them if there is a problem. Pablo, it depends on how much money you have. $100 or $20. Understand that when the stocks are smaller and they can go so fast. A stock that it is $20 can go faster than a stock that it is 100. A stock that it is $10, it can go to $30 or $40 in 1 month or two. But from 100 to 200, it will take time. So it depends on you, on how much you want to buy as a stocks, and how much they move. You know, you compare stock with $20, a stock with $100. If they move in in 1 month or two in the past, well, what is the result? Try to compare them and see what is best for you. Yes, short trading is. Oh, you are in the USA? Oh, okay. Try to send me an email. I will send you a link to my broker if you are in the USA. I thought that you are in. Send me an email. I will send you my broker with a link. If you fund they will give you 100 free commissions, valued at $495. It means when you do trade for 100 trades, it will be free from commission, and the value of this is $495. They just give to the first who apply for a broker. No, but see, why you are scared of 20 and you are not scared of 100, Pablo? It's for us. We want money. So if you buy a stock 100 and after 1 month or 2 or 3 it goes to $110, an example. And if you have a stock that it is 20 and it goes to 40 in 1 month or 2, which one you will choose? I will choose 20. Why should I use 100? Because I will get more money in less time. What do you think of martingale in trading? So what is this martingale? I have no idea what is it. What's this martingale? Supercat Fox. No. $100 stocks. It's not. Harder to move. Some bigger mutual funds, they buy them and they go so fast. It depends on the stock that you are in. Some stocks move slowly, so avoid them. They will not go nowhere. But some stocks, they go fast. For example, drugs sector, they go fast. So it depends. It depends on the stocks and how do they move. So Martin Gale. So as we have explained all the risks and how to control them. Okay. So you should just get the training, apply the rules, and practice. Now, when you practice a lot, you will see the mistakes. What is it? Martingale is doubling up the amount you bet after losing again and again until you win. Oh, okay. Doubling your amount you bet after losing again. Now this is just, strategies. Okay. So why at the first time you buy with certain amount and then you double and then you double? It means here that you have not considered to divide your account into many positions. Now what I suggest is to divide your account into many positions and don't play with the amount of money. Sometimes you buy a lot, sometimes you buy less. And for this martingale, as you told me, doubling your money, I don't use it. I use always the same money for each stock. I give them chances. Each stock, I give him the same chance as the other stock. If one stock is a loser, I lose certain amount of money, which is little, not that big. But if I make another stock make a lot of money, okay, it will be very good for me. Hello Karim, do you watch stocks beta before trading? No, I don't see anything else. The MD trader, no. I have a strategy that works with screening stocks using criteria, and then if I see a signal, I buy. I don't use other things than a signal. Position size, I mean, yes, this is what I say. Position sizing is that you shouldn't play with positions. You shouldn't give a stock too much money and then you go and you give another stock little. And this is the idea that after a few trades, few losing trades, you will get a better trade. Yes, it's okay. But doubling your money each time, it's for me, I don't do that. Sometimes the market is too bad, and whenever you throw money, you lose. You throw money, you lose. You throw money, you lose. So you should just stop a little bit and see what's going on. Martingale works in casinos. Yes. Okay. Here we go, Andrit. We are not doing gambling. We are not throwing all our money and wait until we win a big money. No. We are doing a business. We should allocate money for each trade, and we don't play with this kind of doubling and the other stuff. I don't do that. Did you ever have problems buying emotionally too many stocks, and how did you learn discipline? Oh no. Hey Pablo, for me, I have my money, I divide into positions, I buy those positions. A stock that it is sold, I replace it. That's it. And I go through 1 year, 2 years, 3 years, the same thing. Okay? I don't do emotions because I just buy according to signal. I don't use like I buy a stock and I predict that it will do good. I have never done this, and I will never do it. I don't do prediction. Now, some stocks, yes, I always hold few stocks in my account. Okay? Whenever I need to buy, I go to do stock screening, select a stock, and I buy. So I buy with all my money that I have in my account. Because the minimum bet is very low and maximum bet is very high in many table games. Okay, Andrew, I have never been into casinos, and I don't do gambling, and I don't like to throw my money where the odds are against me. It means when you are doing gambling, you have, for example, 1 million chance to lose and one chance to win. So why should I do that? Stock market is 50-50, 50%, 50%. So I use the stock market, which is not gambling at all, and I can make money if I know how to handle the trading. No. This PDT, which is a pattern day trader, is for cash account also. Okay, when they see you that you are doing more than 3 trades a week, they try to warn you that you are doing PDT rule, and then you should have $25,000. This has to do with a lot of trading in each week. So you should not do more than 3 trades, buy and sell, buy and sell, buy and sell. That's why you will see it. Do you ever short sell, Karim? No, I don't. I don't short sell because I find a lot of opportunities up. I don't worry about short selling. I don't. Okay, thank you very much for info, Karim. Okay, thank you, Karim. Also, what do you do when you get a signal but the chart doesn't look too positive? Do you strictly No. The signal, I use 2 criteria to get the signal. Now, I will do what we call, I have other criteria to do when I select stocks. And this is in training level 4, if you have it or you have, it's called how to select stocks. It means from the list I generate from the signal, I find a lot. Okay, I find 100, I find 200 stocks. But these 200 stocks, I should limit them by sector or by industry, and then I should find only the charts that are good and I think it has a potential to do good in the future. Okay, but it has the signal, yes. But there are others that have the signal but they are bad, so I don't use them. I just forgot about this kind of stocks that they look bad. Okay, so this in training level 4, it will explain to you what are these criteria that I use in order to select the best stock. In 30 stocks, I can find 1 or 2 or 3 that are good, but not all of them are good. Most of them are not. That's why I try to select the best. Or you hold off the trade in such cases. No, most of the time I should find 1 or 2 or 3 stocks. If in that day there is a bad day in the market, there is none. Let's say there is no, all they begin good but they go bad at the end. The signal, it will show you the signal, but the criteria, all the criteria are bad, so I don't buy. But this is exceptional. I have never seen, sometimes I find 1 or 2 stocks daily. Sometimes I find 10, sometimes I find more. Oh, okay, that makes sense. So you filter the stocks even after, yes. This is the criteria how to select stocks in training level 4. It means I should use other criteria. It's like when you want, let's say, to date a girl or to marry a girl. Okay, one of the most things is if she is beautiful, Okay, you date, and then you see the hidden character later. But if it is ugly and you want to date her or marry her, it's your problem. Okay, so this is this is the thing I don't do. So the most important thing is to find a good chart. When you look at the chart, you like it because of certain criteria. It's like beauty in a woman. When you see a woman, she is nice. Okay, this is the first criteria. If she is ugly, why I'm going to marry her when I don't like how she looks like. Okay, so this is something natural with stocks, with a human being. So as I told you, I filter. Yes, I do criteria and I filter, and I filter the stocks. But most of the time, I should like the chart. But when I like the chart and I see a good signal, the same signal I was searching, I just buy. I don't predict. Sometimes I get stocks that reach the signal but go down at the end of the day. Okay, because in the morning some stocks go up, but at the end of the day they go down. So I don't see those stocks at all. Okay, and if you want to try what I am saying, you can do the subscription for 1 month. Subscription, this is a good thing. Okay, it's $50 a month. Now, there are 4 training levels for free. Okay, normally you shouldn't buy those. You find them included, and then I will show you each week how to search, how to select the stocks into the chart, and they give you explanation. The most important thing is why I don't like that chart, why I like that chart. So I give you the explanation and the criteria. I've heard many people say this about the PTG rule, but area the PTG rule is defined only for margin accounts. Just not sure what to believe. I only paper trade. Okay, see, about this guy who is called Minbit 011111 0111. So a lot of ones and a lot of zeros. Okay, don't worry about that. When you begin to trade, when your broker send you an email, you say, okay, you have a warning against your account because you do the PDT rule. That's it. And then you call your broker and he will explain to you why. So this applies for both. And there is another thing which is a problem for cash account, is that there is what we call settlement of money. When you sell a stock, you should wait 3 days in order to get that money back to trade with. So you can just sell a stock and then you buy it again, buy another stock. But in margin account, you can do that. There is no restriction. So this is the difference between margin account and cash account. So a cash account has some problems with what we call money settlement. If you, for example, you have $2,000, you buy a stock, and after a few days, you sold your stock. Now, when you sell your stock, you should wait 3 days in order to get your money back. They will not let you trade this money that you get. You should wait for 3 days. In margin accounts, there is no rule. Okay? You can buy again without waiting 3 days because it is a margin account. Like this live, good stuff. Thanks, Karimovic. So Karimovic is like a Russian name for Karimovic. You changed my name to Russian. I'm not Russian. Yes, thank you, Karim. I think I will do the subscription instead. That makes a lot of sense. Yes, it means you do it just for 1 month. If you don't like it, you just cancel before the end of the month, and you are not getting charged. So here is the website. You just go there, and if you have questions, if you have just questions, you just ask directly. And here is my email. You can email me. Yahoo.com. Here is my email. Just that is called free min bet 123. Well, what does it mean, this min bet 123? I don't know. What's this? Is it like a code for something or whatever? Free riding. So what is this free riding? So talking about risk, we have seen a lot of four kind of risks, and in order to learn how to control your trade and master swing trading, there should be a learning process. You should learn the right way how to search for stocks, how to select them, how to buy them, and then when you buy them you put stop loss. And then each day, at the end of the day, you try to see where your stocks go. If the stocks are going up, you do nothing. There is another way, which is training level 7. It shows you what to do after the stocks begin to go up. There are some techniques that you should learn, and this takes time. So don't think that when you get my training in 1 day or 2 or 1 month or 2, you will grasp everything. Because you have a process to learn skills. In trading, it takes months or 1 year or 2 in order to grasp the techniques. So you need to be patient. Do you recommend stop loss with options? Yes, stop loss is always, but understand that these options move very fast. So, and you are risking all your money, and this is something bad, because options, you should go to options when you grasp trading and you make money from stocks, and then you can go to options, but not you begin with options and then you go to stocks. Options are very difficult and it needs advanced traders to go there. That thing you described about the unsettled funds on cash account is called free riding. Free riding, okay, I don't know that it is called free riding. Now, unsettled funds is 3 days. You buy today, you wait 3 days, and then your money is available. If you take it before, what will happen? The broker will send you an email and he say you have done a mistake. Your money is not settled, so you should not, because you are taking their money. Okay, you are not taking your money, you are taking their money, because their money they didn't get back yet. So they are waiting for your money to go back. You sold your stock, yes, but the money is not coming yet. But they show you how much you will have, but the money is not coming. So you should not buy again, because they will ask you, they will send you an email, and it's very good. They will tell you that you have done a mistake, so you should correct it, and you should not do the same thing. You should wait. If you have a margin account, you forget about all this, and you buy today, you sell tomorrow, then you can buy tomorrow also. So this kind of thing doesn't happen in margin account. That's why this is the differences between margin account and cash account. Okay. For me, I have a cash account just because I have a margin account just because I can buy and sell wherever I want without stopping me from doing so. And because if you have more than $25,000, you don't worry about anything. Okay, that's just the minimum that you have in order to do whatever you want. Karim, do you have only a cash account and that's why you do not short stock? And that's why you don't short stock. No, see, understand that short account, shorting stocks, you can short the stocks without margin account, and this is using ETFs. And I have done this. I have explained this in the last training, which is called how to short the whole market. You can short the whole market with indexes, okay? Not the stocks, but the whole index, the whole industry, the whole sector. You can. So if something goes wrong in the market, I can short the stock without margin account, which is a good idea. That's why I explain things that most of the people, they don't know. So training level 18 explains this, how to do it, how to do this, and it's very easy thing. How to short the whole market. Yes, Shamaro, you see, risk in options is very high compared to stocks, because the risk is, first you buy time. In order to stay in the trade, you should buy the time, which is called the intrinsic value. Okay, so when you buy time, you are just spending money. Okay, especially for those who want to stay 1 month, 6 months, 1 year. Okay, they spend more money, and if things happen bad, you will lose all this money. You lose the time money, and you lose your the value of your money, and this is bad for options. That's why, in order to do options, you should grasp stocks trading first, and then you go to higher, and don't spend too much on options, because the loss will be a lot. Let's say you buy mini contracts, and tomorrow there is a gap down. Okay, you will be losing all your money, and in terms of risk, it's too much. You say that it's the XL ETFs. No, it's just there are a lot of ETFs you can use to do that. That's why I give you the pros and the cons of these ETFs, and how to use them, and how to short the whole market, or the sector, or industry. And it's a very long detailed strategy that you should use in times of trouble, where the market is going down. There is a lot of news, a lot of bad news, or there is a crash in the market. So you try to go grab those, and then you do good. Alive Raphael, hello. From what I understood, you have margin accounts, so you can trade as many stocks as you want, but you don't borrow money, right? No. Understand, you have margin account, so you can trade as many stocks. No, margin account, it doubles your money. Okay, so if you are a good trader, you can use your broker money. Okay, this is very good. It means you double your money. Whatever is money you have, when you have a margin account, you can, which is a very good thing. And for some people who trade well, if you don't trade well, it's better to use cash account, because at least if you lose your money, you don't lose the money of the people. Because in margin account, if they double your money, the profit will double and the loss will double. So you should be careful of using of this kind of margin account. Short sell, going up, buy, this is trading. Short sell, What does it mean? Yes, yes. The way you show the chart, or you show this diagram, it's okay. Yes. Short sell is just if you think that the stock is going down and still going down, you can short the stock. In training level 11, how to sell short a stock, I give details of how to sell short a stock and what are the risks going with this trade, because shorting the stock have more risk, unlimited risk. So try to be careful, because shorting stocks, especially when you are doing penny stocks, be careful, because you see the stock is going down and it was $1. Next day, let's say there is a big move and you find it $5. Do you know what does it mean? It means that you lost all your money and you have 5 times your money, or 4 times you should give to the broker, and he will call you and he asks you for his money. Let's say you have $2,000, okay, and the stock was $1, it goes to $5. So what does it mean? It means all your money is lost and you should give him $8,000. This is a debt. That's why short selling is not for beginners. It is for advanced students. No, see, this guy who is called Cruz. See, I don't predict. You know, in gold and silver and precious metals, we buy stocks. We don't buy the physical gold or physical thing. So if there is a stock, a mining company of gold or silver or any other kind of precious metals, if it's going up, we have a signal, we buy. And then if it goes up, we make money. So it has nothing to do with predictions and what the people say about the gold and silver. And we are not buying physical gold or silver. Physical gold, like you buy an ounce of gold, which is 1,200 something. No, we are buying stocks. These stocks are companies that they do mining in gold or silver or precious metals. Okay, so understand that in stock market it's very easy to buy whatever you want without buying physical gold or silver. It means you are up shit's creek. I don't know what you mean by this, but the thing is, do you use margin account or cash account yourself? If you don't mind. No, I use margin account. Margin account, as I told you, it doubles your money. Whatever is your money, it doubles it. So the buying power will be big. The buying power will be bigger and bigger and bigger because it doubles your money. But in order to use margin account, you should know how to trade, because if you don't trade well, you will double your loss also. Gold and silver are not doing good these days. No, Zorba, don't see the gold and silver. Are you talking about physical gold, or are you talking about the stocks? Stocks, they are not limited to gold and silver prices. They go up and down. They are like any other company. So you should try to, if you want to buy, for example, an ETF that tracks gold or silver. Yes, you should see the chart. You should see a signal, and then you buy accordingly. So we will follow signals. We don't follow predictions or what the market or what the people say on the market or the whole world, what they say about gold and silver. We don't. Oh, you are speaking about physical gold. Okay, Do you know why Warren Buffett doesn't buy gold and silver? Why he doesn't buy? He is one of the biggest investors in the world. Because when you buy an ounce of gold, after 100 years, how many or how much you have? You have 1 ounce of gold. Okay? So the thing that you buy doesn't move, doesn't change. Now, if you buy a share of a company, a share can be $100, but when you divide it into 6 or 7 shares, so it means there is a move because the company becomes bigger and bigger and bigger. But gold doesn't go bigger and bigger and bigger because you buy 1 ounce, it is 1 ounce. Do you understand the physical gold and the gold stocks? Gold stocks are better because the stock is $10. It can go to $20 in 2 weeks or 3 weeks. But gold, do you think that the gold will go each 1 week or 2? It goes to double? No. You see the difference? So don't try to. And it's very difficult to buy gold, and then when you want to sell it, most of the time they give you bad price, so you can't sell it because there is no buyers. So there is a problem. So you borrow money from the broker. Alive. For the money that I have, the margin account doubles your money because it makes bigger and bigger. You can buy whatever you want. Yes. What is the stop loss that you're setting up yourself for your trades? I heard most traders use 1%. Oh no, this up there. Okay, Alive Raphael. Stop loss, it is a tricky matter. That's why I have a training dedicated to it. It's called training level 6. So it's not easy as you say about okay. So there is a training 6 how to calculate stop loss. So it is a tricky matter. It's not 1% to 2% that you will make money. Okay? Because there are your risk and another trader risk is different. So you can't use the same stop loss. Stocks are different. Some stocks are going very fast, some they are going very slow, so you can't use the same stop loss. When it is a penny stock and when it is a normal stock, you can't put the same stop loss. So forget about this percentage thing for everything. Okay? If I tell you, that's why we have a lot of sizes, a lot of things. Things differ from one stock to another. I will give you an example to make sure you understand. I can have 2 stocks, the same price, but in stop loss I do differently. Why? Because of the stocks themselves. They are different, although they have the same price. So there are other criteria that you should see, not just percentage. There are other things that you should see, and this is a tricky matter, so you should study this in order to understand how to calculate the stop loss. There are many ways to do it, not just one way of the percentage. I'm going to check your training. Yes, my training is the beginners from training 1 to 10. Okay, you can do subscription. You will give 4 training levels for free, and you subscribe. Okay, or you can check each training by itself. For example, how to search for stocks using stock screener. It's training level 2. So you can just go and grab training level 2 and you study it, do the same, and then go to the other training, because each training is specific for something that you should learn from my strategy. It doesn't produce anything. Yes, the physical gold doesn't produce anything. It doesn't change. So 1 ounce of gold after 100 years is an ounce of gold. So no change. Okay? So no change. And it doesn't produce nothing. But companies grow bigger and bigger. Do you remember? Small companies becomes bigger companies and becomes so big. So the bigger they are, the more money you make when the price go to change. Gold valuation in the eyes of the prospective buyer, same as art. Art is based on the perceived value of the person's eye. No, see, prospect. I will tell you. I don't use valuation. I don't use anything. I use a signal. I see the chart, and I trade from the chart when I find a signal. I use a stock screener. I don't use valuation or someone tells me what the gold or silver will be in the future. No one knows because the person who says doesn't know. So we don't predict in my strategies. Okay, we don't predict. You find a signal for some stocks, gold stocks or silver stocks or whatever precious metal stocks. We just buy them. Okay. If they go up, we make money. That's it. We don't see valuation. We don't see this kind of and you say trading is an art. Yes, it is an art. You should learn techniques. You should learn skills to ameliorate things. But it is not science. It is not something sure that we do in training. We do by probabilities, but we don't do a sure guarantee thing. If you buy my strategy, it doesn't mean that you have a signal that you buy this stock, it will go up by force. It's the market who decide if the stock goes up or goes down according to what the traders do. So no one knows what the future will be. So don't predict and try just to use signals. They are better. The rule is you can't buy and sell the same stock the same day. Some brokers allow up to 3 trades a day like that. Does opening margin account and using your own cash bypass this limit? No, what you say can't and buy and sell the same stock the same day. No, this, if you have margin account, you do whatever you want. No one will stop you. Especially when we have $25,000 in your account. So this is the rule. So in a cash account it will be difficult to trade like that, because if you do more than 3 trades they will stop you. But if you have more than $25,000 in a margin account, it means you have 50, because 25 is yours. The broker will give you 25, so you will have $50,000. So the most important thing is to have $25,000 that it is yours in a margin account. And then you can buy whatever you do, you sell whatever you do, no one will stop you. Why the broker will stop you? He will be happy to make a lot of commissions from you. He will be happy. But to understand that you are asking about day trading. I am not doing day trading. We are not doing here day trading. We are doing only swing trading. We don't buy and sell in the day. We don't. You say, are significant price levels a good way to gauge your risk? What do you mean by price levels? What if you have a margin with less? Now, if you have a margin with less than $25,000, which is yours, you can't make more than 3 trades a week. They will stop you. They will send you a warning and they will stop you. You can do that and they will stop you. The broker will stop you. Yes. This is what he says. If you do 4 or more, Trades, it means buying and selling, buying and selling. In the same 5 days week, they will send you a warning, and they will tell you that you are doing more trades than accepted. But if you have $25,000 and more, they don't care how many trades you do. You do 1,000 trades, they don't care. No. I don't play this game. I use stocks and then I use options. No, because the direction is one. For example, if I buy long, if I buy and thinking that the stock is going up, okay, I buy stock, and then you put all option against it, which is puts, which is going down. So what's the deal? If the stock goes up, my option will be, I lost the money of the option. So what's the deal? So you can't play with the market. You should be with the direction of the market in order to make money. If you are playing sideways, you will be losing money. Yes, prospect, yes. You are right. Warren Buffett doesn't like precious metals, so he said in his videos that he doesn't buy them because they don't move, they don't grow. Now when he buys companies in the 50s like Coca-Cola, and he buy Geico, he buy other things, okay, these companies grow and becomes bigger and bigger and bigger, okay. But if you buy gold, he will have the same gold like in the 50s, like now, the same gold, and he will not make that much money accordingly. And that's why stock market is the best vehicle for making money, better than precious metals, better than bonds, better than anything else. What if you buy like 4 stocks and you set up stop loss, and the price goes below the stop loss? So in this case, you will be stopped by a broker. You will stop by. No. When you put stop loss and you exit, that's okay. But if you here you have done 4 trades, you buy and you sell them because of stop loss. So if you want to buy again, so he may stop you and send you warning. Okay, this is the question. Do you know how low GNUG will drop on Monday? So, who tells you that you will leave to Monday to see what will happen in the market? So you are speaking about the market. You are speaking about the future. Don't speak about the future and don't expect and predict anything. So here in my strategies, I don't pretend or I don't expect something. I don't. And I don't predict a stock what it will do. I will see it when it did something. I will see it. No, see, if you buy options or buy something, you know, these guys, they have billions of dollars, and they can do advertising for some things, and they can make money because they do advertising. They do a lot of things. So don't compare yourself with other people, what they are doing. And he can lose also. It means there is no one who is like a winner always. You can lose some trades as other people do. So in general, we do, I do swing trading in stocks. So I don't do options or futures or forex or other stuff. Okay, this is what I do. Yes. So controlling risk in your trade, it's not only stop loss, but you should learn how to trade stocks. you should do a lot of things. So you can't buy more than 3, because in this case, again, let's say I buy 10 stocks on Sunday and I set stop loss. Monday, yes, but don't worry. Why you are worrying about being able to buy? Because the broker will not let you buy. He will flag your account and you can't buy. So there is no, don't worry about this. If you lose, you lose. And it's preferable not to buy a lot in one day. So you buy one stock or two, and then next day you can buy more if the things go well. So in this case, I bought and sold 10 stocks the same day. It's confusing, as they are basically just trying to stop peasants from doing something good with their money. No, they put rules. Okay, this is their game. It's not your game. They put the rules for the game, so you should accept the rules in order to play. Don't change the rules of the stock market. It's the government, it's whatever, they put rules, so you should follow it. You know, margin about 5% or 10 or 1, this is just calculations. It depends on the stock, it depends on your risk. The stocks are not the same. If a stock is going up 10% each day, how can you put 5%? So the next day you will exit and the stock is going up. So there is no Martin, you should go to training level 6 and you study. You have the training, I guess. You should study the training again and again. And if you have questions, you should send me an email about a trade or two, and we can discuss that into details. Because you can't just say, oh, do 5%. There are some stocks that are very slow. Why should I put 5%? And there are some stocks that are volatile. I should make more risks, so the percentage will change. Do you pay an interest rate when you use margin account? Yes, for the people who use the money, yes. Sometimes I don't use. So most of the time I don't use margin account. I use it for other things. But so it depends on the people. If you want to use the margin account, it means you use the money of the broker, you can use it. If you don't want to use it, don't use it. Because if you use it, it will charge you interest rate according to the broker. Okay, some brokers, they charge too much. Some, they don't charge nothing, just little. I worry that I am still holding the bag when he flags my account. Oh, no problem. Okay, no problem. You should just call your broker and he will explain to you what you did wrong, and then you fix this. That's it. Do you do trading your full time or you have another job? No, I don't have another job. The thing I am doing is full time and I have my own business. But you can't stop people from doing other businesses or doing other investments. You can't stop that. It means you don't. All the people in the world, look at the Warren Buffett, for example. He bought companies and he is still buying companies. He buying in the stock market or outside the stock market. So when you know business, it opens money for you. You can do whatever you want. You don't stick to one thing and that's it. You can do whatever you want. How often do you play earnings trades? Okay, earning dates is very difficult and very risky. So if you want to risk more, you can do it, but understand that the risk is too much. So just understand that there is a big risk. But the earning dates, it's not all the stocks that go up and go down. They have gap up or gap down. No, most of the stocks, they have the earning comes, there is nothing. Nothing happens. You see a lot of stocks, they do nothing. But there are some stocks that respond well to earnings. Okay? Like internet stocks, like drug stocks, pharmacy stocks. Okay, all these kind of stocks, they respond well, and sometimes they do so good. One time, I gave you this example to know the thing. I bought ANAC at 78. The next day, I doubled my money, and it was 135. Okay, so this is just an example. Sometimes you got something good because you risk, but it can go down also and you lose a lot of money. So you should be okay with this risk. You are risking too much. That's why, since we are in this session talking about risk, okay, so you should understand that there is a big risk in earning dates. No, alive, Rafael. I do screening around 3 o'clock p.m. in the afternoon when I need stocks to buy. I don't. Why should I do screening daily if I don't use them? So I don't do screening a lot. I buy stocks. If I exit a trade with a profit, with a loss, whatever it is, I replace it the same day. We do the search with a stock screener around 3 o'clock p.m. We search, we find stocks, we select them, and then if I buy one stock or two if I need, and then I put stop loss, and then I close my account. This is what I do. Next day, if the stocks are okay, why should I go to do screening and to search for stocks? Because I don't have money. So why should I go and search for stocks? I don't. Yes, some financial stocks, but it depends on the stocks. But some stocks, they do well in earnings. Some of them, you should go to these stocks and find in 1 year if they have gap up or gap down. This is the good thing. If you find that the stocks are doing gap up and gap down, that means that these stocks can do well with earnings. Yes. So there is a lot of risk, and this is what I am saying is controlling risk. For earning dates with some stocks, you can't control risk. The risk is big, so it's up to you. Either you want to trade it, or to stay in it, or to exit. Yes, Martin. I have shown a lot of trades, but the thing is, I don't show where I buy the stock because this is a part of trading. But sometimes, but I have shown a lot. Even in 2012, I have into for people with Facebook. It was 1755. The next day, 1999, I bought it and made a video. This is for my old. Sometimes I show information. Some people, they think that it is just global information like that, but I give ways to understand the market. That's why some people they buy according to what I say in the future, and they have made a lot of money from that. Yes. At that time, I don't have that much people, and I have done it with. I have done it last year with. You go to 24 August last year with Brexit news with the UK. Okay, I have done also showing trades and is it a buy or no? I showed this. But some people, they take it as serious and they buy some stocks and they make money. Some they don't take it as serious, so it is just the information. But those people who use it, they can make money. Yes, yes. I use a stop loss, but at that time they are not called stop loss, but it is a stop loss where when I get that much profit. But there are techniques and skills in training level 7. I have said this before, which is how to follow an uptrend. Now, this will show you the skills or the techniques I use in order to exit and where I put my stop loss. When the stock has been going up good for 1 week or 2 or 3 weeks, okay? This is what I do. But stocks are not the same. So there is no, I don't show you a pattern, but I show you techniques to use. And this is how you can understand and you do the same as I do. You say you skipped my question. Alive. What is your question? I see all the questions. I don't know if I skip one or two. Can you repeat your question live? You skipped my question. Can you write it again? I will try to check it. What do you think about TD Ameritrade and which broker you think is better? Now, brokers is according to their commission and according to their fees. Okay? So I am using a broker that doesn't charge when you stop trading, doesn't charge for live data between the bid and the ask, and the commission is $4.95, and it will not change when you after years. It doesn't change. For example, for me, I have $3.95 right now, but it is old price, so they let it to me, so they don't change it. Yes. This is what I'm telling you. So when you go to my broker, it will give you 100 free commissions. Okay. So if you switch, and then the commission afterwards is $4.95. So you should compare this kind of brokers and see what is the best for you and the execution. If you buy stock, does it go quick to buy, or do you wait for 10 seconds or 30 seconds? It means there is a problem with this execution. So you should see all this when you are trading stocks from the same broker. So as I told you, you can use a stop loss to exit a trade with a profit, because here is the deal. The stocks, when they have a big move, sometimes they go down as they go up for 2 weeks or 3 weeks. They go down so quick. So if you don't have strategy how to take your profits, the big thing about your profits, you will lose a lot of money. It means you will lose a lot of profit from what you get. Thanks, Alive, Rafael. Thank you very much. And for me, I am with one broker for a long time. I have used interactive brokers, and I took my money and I closed the account. Okay, because whenever you don't want to trade for a long time, for 1 month or 2, because you have some position, something, they begin to charge you. He charge you for live data for the bid and the ask, and this I don't like. I don't like that I pay for anything else. That's why my broker that I am in with from 2010, it's the best as I see it. And when I call them, they answer me, they explain whatever problem I have. So I am good with them so for many years. How often do you do these lives and what time? Okay, I just began this live streams. Last week I have done one, and today I have done one, so I have done only 2. So I will be doing this each week the same time, 10 o'clock. 10 o'clock on Saturday, p.m. Eastern time. This is my best time. 10 p.m. Eastern time on Saturdays. This is what I want to do in the future, but understand that, you know, we will see in the future. I will announce when there is a live stream like this, and you can you don't want just to wait. You can just ask me questions or go to my website for information, or you send me an email. As always, if you have questions, you don't wait, and then we can choose a subject, and next week we do, if God wills, we do the same. We do the same thing. This is my website. Oh, no, I'm mistaken in this. Okay, I have been mistaken the website. Sending emails, please, to notify for live. Yes, if you are a YouTube subscriber, they will send you an email. So did you get an email from YouTube like 2 days ago about this live streaming? It means it's okay. If not, you should see your YouTube. Maybe you stop receiving things from YouTube. If you do that, it means you can't get my email. Yes, if you are a subscriber, it's very good. I'm trying to do Saturdays at 10 p.m. Eastern time, and then we see if it works good. I will keep that. Thank you very much. You can send me an email also if you are confused or you don't know. You just send me an email and I will answer that, no problem. So as I told you before, controlling risk is a very, very big subject, and you should take your trading as a business, not as a hobby. You should make the difference between a hobby and a business. In a hobby, it is just something you like, but you are not thinking to make money from it. But when it becomes a business, it's another thing. Karim, I have a question for you. Can you start a group where you have your students join online so you get to see the kinds of trades we make and stuff? It happens the other day, 2 live, they go up a bit and plumber back down past your stop loss. Focus on the probability. Regarding stop loss, the problem. Oh, okay. Join online so you can get to see the kinds of trades we made and stuff. So for me, I follow traders individually. It means they are always sending me what they do, and I try to give them my opinion. If they don't understand, I will take them back. I will explain to them what's wrong, and I will take them back to the training, and they will watch the training again, and I will try to fix their problems. Okay, so it is a continuous thing. So for you, for example, the empty trader, you can check any training and you begin to study and learn, and then you ask me questions by email. you will get direct answer, and you don't wait, because the people that I have, each one is different. Some they have small accounts, some they have big accounts, some they are advanced, some they are beginners. So all the people are different. So for you, you try to focus on yourself. Don't focus on other people. Focus on yourself. You have a question, you send me an email. I will try to discuss with you this issue in order to correct what you are doing wrong. Okay? And if you see the trainings from training level 1 to training level 18, if you have doubt what to order or not, you can just click those training and you see what they offer, and then ask me questions. This is the best thing to. I have a lot of people like some of my students. They always send me emails. I don't give. This is the thing. I don't give recommendations of stocks. Okay, but I can help understand why you choose that, why you don't choose the other one. That's it. Regarding still the problem, sentiment of the stock goes down before it goes up, and once it goes down, we exit the trade and we missed the uptrend. No, alive. This is your opinion. Okay, this is your opinion. What if the stock, you don't put stop loss and it goes a long way, a lot, and you lose a lot of money? What will you do? Do you ask the market to bring you your money back because you don't put stop loss? This is an idea of the beginners. When you become more professional, you must put stop loss in each trade. That is how you control risk. Now you don't want to control risk. I'm speaking to alive, Rafael. This is the whole session that we are doing, is how to control your risk. If you don't put stop loss, you will never control risk, and you leave the trade open to the market. So the market will do whatever. If they take 10% or 20% in one day, it will take that, and it will never give you back your money, and you have a big loss. When you have a big loss, your trader career will end soon, because if you get a stock, you get a trade at 20%, you lost it, then you lose 30%, then you lose 50%. So at the end of the year, from where do you bring money to trade? It's over for you. What is your subscription? 55 a month. What we do get? Okay, Zorba, you get 4 training levels. The first one for free, and you get about. We are in 69 searches. Each week I do a search. I search the stocks. I show you how to search and how to select the stock. There are about 250 videos, and each week I will add more. So this is a practice. You should go with me and you practice. I must have the answer. What is the name of the broker you use? Yes, I use Options House, but if you want to do it, you send me an email. I will send you a link in order to get this 100 free commissions. Oh, okay, that's good, and that makes sense. Individual training. I will start the subscription soon. Thank you very much. And some like me have no account yet. Oh, okay. You can do a virtual account, and you can begin as whenever you want, within the next 2 weeks. Also, can you explain how the subscription will be like? Will it be a live stream, and also will have? Oh, no. You will have training level 1, 2, 3, 4 on videos. And when I upload videos, it will be videos, not live stream. Okay? It will be videos that I do on Friday, and they will be available on Sunday. You just see, and you can do the same as me, because Friday, Saturday, Sunday the market is closed. So you can do the same as I do, and you see why I choose those and why I left those. Okay? So like we have no account within 2 weeks. Also, you can explain how the subscription will be like. So there is no PDF files. You will find the training videos in videos. It's the same as if you order them alone. Now understand that when you stop your subscription after 1 month, well, it means you do 1 month. If you stop your subscription, everything you can't access again. It is a subscription. But if you buy, for example, or you order a training like let's say you buy a training level 2, how to search for stocks using stock screener, it will be there in your account and you watch whenever you want, because it's not subscription. It is something that you order and you find it always. Yes, sometimes live. Sometimes you get the stop loss hit and then the stock goes up. Yes, sometimes it happens. What you should do, you buy it again. So what's the problem? If you think that the stock will go again to your price, you buy it again. But this is better than you don't use your stop loss. And there are some problems. You should know how to use the stop loss. Okay? You can send me, for example, if you bought a training level 6, you study it and you see yourself. If you have it, send me email and we try to discuss what are your trades, and when you put stop loss, I can give you recommendations what to do because you have done mistakes. Yes, you will get to study these things in the weekend, but you can study the other weeks also. There are about 250 videos, so we are in search 69. It means 69 weeks. Each week I do the search on Friday, and it is just for a practice. It is not a stock picks. So those people who want stocks to buy, no, this is not a stock picks. This is a practice on how to search for stocks. This is what I do. Thank you, Zorba, and see you soon, and good night. Good night or good morning. So I don't know where we are. You are in Europe. You are in the future. So good morning. We are still at night. So you are in the future. You know better what will happen in the world. You are like, I don't know what's the time now, but you are the future, which is very good. We are in the past and you are in the future. So, later, Zorba, yes. Some people maybe they go to work or in the morning in Europe, especially in Singapore. I think it's like maybe 10 hours or 20 hours or 12 hours. I don't know how many hours from USA. Singapore is in southeast of Asia, so it's a far away country. No, I don't want stock picks. No. Want to learn. Yes. The empty trader. For me, I am training people to be independent trader. I don't want to have my students as dependent on me. They don't depend on me. Everyone he takes the training and we go through a process, he will be able by himself to do decisions by himself. He doesn't need me. Now when he needs me, when there is a problem, when there is something that he doesn't understand or clarification, I will be happy to clarify these problems, and I will be happy to explain always. All the people who send me emails, I will try to help as much as I can. For the state I am in North Carolina. I was in Virginia before I go to North Carolina. North Carolina is a very good state. It's warm. I don't like cold. I don't like a lot of snow. So I like warm state. It's a very good state. So as always, to to control like risk, you should do whatever in order to protect your money. Because when you say control your risk, it means you control your money. That's why you are doing business, to control your money. It means expenses should be limited, very limited, and you should have high profits. This is what we are looking for. That's why when we buy stocks that doesn't do well, we just exit with stop loss. We don't waste our money, waste our time with losers. If stock is good, we stay until we make that much money, and then we can exit. Yes, here in North Carolina we have nice weather. It's almost is sunny during the whole year. We have some clouds, some rain, but the weather is so good. That's why I like it. I go hiking and I go fishing. It's a lot of things you can do here. So that's why, and there are not a lot of tornadoes and the other stuff. So it's pretty well. So we try just to conclude with this session of control risk in trading stocks, and we said that the main thing is to know what you are doing. And this is why when you go through my training levels, you begin to understand the whole picture. Okay? When you buy, you use limit, and when you sell, you use stop loss. Do you use any other? No. I don't use any other. I just buy stock and put stop loss. That's it. So easy, so simple. I don't worry about anything, because when I want to buy, I want the price that I see. If I want to exit, I need to exit with a stop loss. If you put another kind of stop, sometimes it doesn't work. But stop, it means it becomes a market order, and you ask the exchange that I want to exit the trade with any price available. That's why it's so good. It means you exit the trade, that's it. You have a loss, a small loss, that's good. That's better than to wait 1 day or 2 or 3 and then you have a big loss. When you have a big loss, you will be losing a lot and you can't continue trading. That's why a lot of people, they lose a lot of money. If they someone from Canada, he has like $45,000. He traded 1 year or 2 until he has $5,000. It means he lost $40,000 playing with his money. Now when he lost all his money, he comes to me and he said to me, oh, I want training to double your money. I say, there is no doubling your money like this. What do you think? So we are not doubling any money here. So you should learn and you should practice and you have skills until you become good at trading, and then you can make money. Okay, so as I told you, I don't use other types of, I use simple things either in selecting stocks, in following stocks. All my techniques are very simple and you can follow them one by one. And if you don't understand or you have confusion, you just send me an email and I will explain that point clearly with examples. If you have a stock that you have problem with and you don't know what to do, just you send me an email and then we can discuss what's wrong with this stock or why you buy it or why you want to sell it. Okay, so all this according to my criteria that you find in trainings. So I will give you all the information and I will tell you which training you should go in order to find the information. So everything is in. I don't keep some secrets. I don't have secrets. I do the same as I train as I do in my real. It's the same thing. So hope you enjoyed your this session. Please, if you have some questions about risk or about any other questions, you can just ask now. It's 2 hours and 40 minutes, so we try just to see if you have more questions about trading or about risk, controlling risk, and we can discuss them before we close this session. When you said in your videos you don't check the stock again until the end of the day and change the stop loss if needed. Do you change the stop loss during the day? No. Because you will never know what will happen in the morning at 9:30 or 10 or 11 or 12 or 1. So stop loss, if your stock reaches the stop loss, you exit at any time. But for me, I go at the end of the day, like 3 or 3:30. Now I check. I don't need to check every minute. Okay, I don't. The only thing I check in the morning before the market opens is if I have earning dates. Because sometimes I sell in the morning. I don't use stop loss because I sell. And this has happened, and I almost sell my stocks with a gap. With a gap up, when I have made a lot of money, I just exit the trade in the morning, and I catch all that the gap up profits. I catch all of that. I don't want to see the day and what will happen in the day. Okay, so this is normally what I do. So I don't changing the stop loss. I can change them at the end of the day if I want to. But if the stock doesn't do nothing that day, if the stock, for example, was $20 and then it goes $20, 10 cents or 20 cents, what should I do? I don't touch the stop loss at all until I see a big move. And then I have techniques used in training level 7, and I do that in order to maintain my profit. So this is what I do. Let's say you buy stock at 10 and the price goes to 20 at 2 p.m. and then goes down at 3 p.m. No, it doesn't do like this. Most of the time stocks doesn't play like this. It goes to from 10 to 20. It means double. Now this can happen in penny stocks. Yes, can happen. But it doesn't happen in common stocks. In normal stocks, it doesn't happen like this. So, but it can happen. It may happen. So that's why I am not a day trader. If I begin to see my stocks each minute, I will begin having stress, and that's why I stopped doing day trading. Because before I was day trader, and I was trading in the morning and the whole day. So right now I do only swing trading. I don't worry about what to happen today. But at the end of the day, I will take decisions. What to do, to change the stop loss, not to change it. But if I exit, it's okay. Yes, between 2 and 3, most of the time nothing happens. So I'll check like 3:45. I check stock. Most of the action is done in the morning. Most of the actions of the stocks. At the end of the day, there is nothing that matters. Okay. No, I don't use what we call a risk reward. Okay. I don't use. Okay, I will tell you an example. If I buy a stock at $20 and the stop loss is $19, what do you think? Do you think that the stock goes to $21 or 22? I will exit. This is what you are talking about this risk reward. Now the risk. I should know the risk, but the reward, it's the market which give me the reward. I don't know. This is done, risk reward is done a lot in day trading, but it's not done in swing trading. Because, I will tell you an example. How do you know where your stock is going? How do you know? So the reward we will never know. It's the market which gives us a gift. Let's say the stock each day goes $1 more, $20. Second day 21, 22, 25, 27. Why should I exit? The stock is giving me money, so why should I worry to exit and check this risk reward? There is no risk reward in what we call swing trading. Swing trading, you should wait until you see high profit. There are some techniques that I should use a stop loss later in order to have almost my profits if the stock doesn't move as I wish. Okay? So I should follow the stock. That's why I told you that each day I see my stocks. What did happen? Just to see if I can change something in my stop loss or something. If there is nothing, I will never change. Okay? So I don't use this price target and the risk reward. I don't use all this stuff that you know, or the ratio between winners and losers. I don't use. I have another concept in trading level 5, how to make money from stocks. If you can see that, trading level 5, how to make money from stocks. This explains how to make money really from the market. It has nothing to do with losers and winners and their percentage. It's not true. That's why when you go online, they confuse you with these things, and you believe them. When you believe them, you will never make money. Yes, but the empty trader, I don't just the stock moves, I change the stop loss. No, it has techniques. I use other techniques. It has nothing to do with the price. I should use these techniques in order to know if the stock is willing to go up more and more. I have signals. The stock gives me signals to know if the stock is willing to continue going up, or he doesn't want to continue and he wants to go down. So when he wants to go down and it's over, so I exit the trade. Most of the time the stock goes down and it's over. What do you do about the aftermarket hours? Because sometimes you pick stock at 20 and you place an order at midnight. The next day at opening the stock goes to tenders. Oh no, the stop loss doesn't work after hours or before hours. Doesn't work. So the stop loss works during the day. It means from 9:30 to 4 o'clock. This is where you put stop loss. You don't put stop loss after the market closes. So it's not. Yes, the empty trader. The way to follow the stock is training level 7, which is called how to follow an uptrend. It means it gives you just techniques how to follow this with examples, with techniques. When you see that, what you should do, when you see the other thing, what you should do, and you have just guideline. This guideline shows you what to do. Okay? It's not just the stock goes 10 cents, you change your stop 10 cents. This doesn't work, and you will exit at any time. So this is not a good strategy to follow the stocks. That's why we have specific rules, specific criteria you should use. Yes, you know, the more you go into the training levels, the more you see the whole picture. Now, training level 5 gives you the whole picture of trading, how to make money. This is just a concept. It is not losers and winners that makes you the money. For example, they say, oh, you have 60% winners, 70%, I am making money. This is not true. You can make 70% winners and 3% losers, but you are a loser. At the end of the year, you don't make money. So it's not that makes the money. So you have to set up stop loss during market hours, and you cannot set it up after market hours and becomes activity. Yes. And there is because after the market closes, the bid and ask becomes wide. So you can't do that. You can't do stop loss after, except when the stock is very, very active. After there is a news or there is something. So it's you should, if you want to change stop loss, change them before 4 o'clock. Change stop loss before 4 p.m. before the market close. This is where you want to change, if you want to change to. Sometimes you find after the market, especially penny stocks, you find 0, you can't change anything. The bid, you find it zeros, it means there is no buyer, there is no seller, it's 0. Although the stock, for example, at the close was, let's say, $4. But if you go after the market close, you find 0, it means that you can't do nothing until the next morning at 9:30. That's why it is very important to do stop loss at the end of the day if you want to change something. If the market closed, you will have problem. Okay, you can't. So this is what most of the people do. I do always things at the end of the day. Another thing about, I just want not to forget this. Why I sell in the morning when we have a gap up? Because sometimes the gap up, it's so high and then it goes down during the day. Okay, so on average, how long do you end up staying in a stock? How you use the stop loss, but usually how long do you end up staying? Okay, I can stay one day after a gap up, or many weeks or months, depending on the stock. I can stay 1 month or 2 or 3. If my stock is giving me money and I can handle how to follow the stock, I can handle that. So why should I go out from the stock if it gives me money? I have seen stocks that in 6 months is still giving money. So why should I exit that trade? It's a good trade for me. So the average, it could be few days, few weeks. So it's not, each trade is unique. Okay, each trade is unique. So each trade is different. One few days, 1 2 weeks, one month, 1 2 months, 1 3 months, one day, 2 days, 3 days, it depends. So I will never know because I don't know the future. So I can't decide for this. Now, most of the time when I have a gap up, I exit. Even before the market opens, sometimes I exit. When I see a lot of money, I just exit. I have done this a lot with Facebook, with Apple, with Twitter before, and you can see many trades that I have done. I publish them, and I say what did I do. It means sometimes even before the market opens at 9:30, I sell. No, going down with a gap down, you can't avoid that. You can't. It's a risk that you should take. So in training level 8, how to minimize risk and maximize profits, I give examples and I give guidelines what to do, okay, in order to make less trouble to yourself. Okay, so I explain these things because these things is very detailed and part of my training. So it's specific for some situation what you should do. Yes. Never limit your, yes. The empty trader. That's why Wall Street, what they say, let the profits run and keep your losses short. This is the basic thing in trading. If you don't do this, you will never see the money. That's some of the principles of trading. But the people, they get scared. When the stock is going up, the beginners, what they do, they sell. Because they say, oh, what if the stock goes down? So they take $100. Now, but when the stock is going down, they lose $100, they stay thinking that the stock will go up. So they do the opposite as a professional trader do. And this is why they lose a lot of money. No, Rajesh Pillai, I think you are Indian, from India, right? There is no what we call bearish or bullish. For me, if I buy stock, it goes up, I make money, it's good for me. It is bullish. But the stock is bullish, not the market. So don't confuse the market with the stock. You are not trading the whole market. Okay, you are trading indexes. I'm not trading indexes. I'm trading stocks. Stocks, even the market is good, it is bullish, you find some stocks going down. So it depends on me where I am. If you are with a good stock, you will make money. If you are in a bad stock, you lose money, regardless of the market. So I don't look at the market. I look at the stocks, individual stocks. So there is no bearish for me. I have stocks, they are going up. So I am making money. So why should you care about the market? Are you a billionaire? You want to buy the whole market? You buy stocks. The market can go down, but some stocks go up. So it's you where you are in the market, not the market itself. Yes, I buy stocks at the end of the day before the market close. It means at 3 o'clock, just to give you an example, 3 p.m. I search using stock screener. Okay, then I buy before the market closes and use stop loss. It means you should have enough time to search for stocks, to select them, and then to buy the stock itself, and then to put stop loss. You should have time. Normally half an hour is enough for you to just search, and buy the stock and put stop loss. 320, 330, 340, you buy the stock at the end and then you put stop loss. You plan through the chart as I showed you in the training or in my YouTube channel, that I use the buy, which is a green line, and then use stop loss with a red line and leave it in the chart. Yes. These are called solo stocks. It means don't worry about the whole thing about the market. You are buying individual stock. Okay? Let's say you just an example, you go to a town or a city where you find all the women are ugly, but you find one which is nice, so you pick the nice one. So you don't go with the whole ugly women, so you go with nice women. That's the stock. You should choose the stock according to stock screener. You say, look at the Trump. No, see, the stocks follow the big hands in the market, which are mainly mutual funds. When they buy, certain kind of stocks, they go all in one industry. This is what we call industry rotation. If you want to understand this thing about industry and stocks and how they move, you should see training level 3, how to search for stocks using an industry index. This will explain to you this kind of stocks and industry and how things work. Yes, for me, in swing trading, I don't use fundamentals. We don't use company fundamentals and the other stuff. Okay, I use only the signal. I don't care about the company, what is its financials. I care about if the stock is still going up to make money. That's what I care about. Yes, because most of the time, the mutual funds, they are not stupid to buy a bad company. They should buy a good company. It means they know better than us. It means they know the financials, they know. So they try to buy the best. So for us, we follow them. So we are like following the trend. And the trend is the mutual funds. When the mutual funds begin to buy, the trend will begin. Now we follow the trend. It means we are following the mutual funds. That's why we can make money. Because they move the market. If they sell and the stock is going down, we shouldn't buy because they are selling. They will crush us if we are buying when they are selling. And this is what happened in the market. And the news and the people, what they say, this is what happened. Just this last concern about stop loss. Stop loss doesn't work during after market hours. So if you buy stock at 3 p.m. and the price drops a lot, there is no way to stop it. Oh, you mean after the market closes, the stock will go down? Yes, you can't. But if you want to exit, you can see if the bid and the ask is good. You can exit whatever you want. But most of the time, the bid and the ask is so wide, you can't sell. Okay? So this is the risk of swing trading, is to hold overnight. If you don't like to see gap up or gap down, try to avoid earning dates. They are on the websites like Yahoo, like Google, or Nasdaq or New York Exchange. Just go there and find earning dates. But the market can gap up or gap down at any moment without news, without these earnings. So if you don't like that, you should do a day trading. You shouldn't do swing trading. Yes, it doesn't work because if you put it to work after market hours, you will exit because the bid and the ask will be so wide. I will give you an example, Raphael, to understand. So, for example, during the day, so for example, bid $20, ask $20. Okay, so this is, for example, a stock during the day, $20. The bid, ask 20. Now after hours, what will happen? Bid, let's say it becomes 15, and ask, it becomes, let's say 30. Just an example. Okay? So here you can't sell, because if you sell, you will be selling by $15. If you put the stop loss at 18 or 19, it doesn't work. And after hours, I will give you this information. There is only limit orders. No stop orders will be done. Okay? Only limit orders. So don't worry a lot about this. If you don't want to hold the stock, don't hold it. Why you are doing? Don't be scared about the market. You shouldn't be scared to trade. If you are scared to trade, you should do day trading. You shouldn't do swing trading. This This is the most important thing I will tell you. So that's the thing about this risk, because in swing trading you should bear the risk of overnight. Sometimes we have gap up. What if you buy a stock at $10 and the next morning you find it $20? Will you be happy with that? Yes. But if you lose $1 or $2 from this, you will be sad. No, you shouldn't do that. You should try to accept risk in trading. It's a business. You accept the risk. Okay, if you are for swing trading, welcome. Welcome to the community here. Because we are not doing day trading. I have a training about day trading, but it's only for those who like day trading. I don't do day trading anymore. So I do only swing trading because I don't want to be glued to the screen and see each minute what will happen in the market. No, I don't like that. I spend my time doing something else than watching the screen. Okay? I go to the screen, to the market, only at the end of the day, or if there is earning dates, I go in the morning to see if there is something happening. Yes, you can sell after the market. Okay, with a limit order, you can sell with a limit order. But most of the time, it's a bad idea, because sometimes the bid is low. So if you sell, you will lose a lot of money. And in the morning, you find it is up. So you are just worried about nothing. So for me, I don't see after the market or before the market. I don't see, except when there is earning dates. I can exit in the morning. If there is a big gap, I can exit. Yes. There are some people who use the earning dates. One time I showed them a technique. You can buy before the market close. Before it, just you buy, and then you see the news. If you see the stocks going up, you can sell, because there is a lot of traders there, and you can put a limit order and you can exit with some profit. But for me, I'm always waiting until the morning and see how much should I get from this gap up, if we have. But I understand that there is a risk, and you are doing in business, even in your job, you have a risk. When you go from your home or from your house or apartment, you go driving to your job, you have a risk to have an accident. Yes, yes. So all this life has risk. But if you can limit the risk or reduce it, it's okay. It's very good to reduce and limit the risk. Okay? And there are people who are with big risk. It's up to them. There is no one who will stop you from doing whatever in the market. That's why the people do foolish things. That's why they lose a lot, because they do whatever they want, although they know they are wrong, but they still continue doing wrong things. That is the main thing for this thing. Okay, so it's 3 hours 9 minutes. I see right now. If you don't have any other question, we can stop this. If you have more question, please write your question. Whatever is your question. We have been together with 3 hours. Which is 3 hours 10 minutes, which is very good, and I hope you enjoyed the session. And we will do in the future other sessions, and we change the subject. We change the subject each time, and we try to have a good night alive. And each time we try to see another aspect of trading, and we speak into details, because there are a lot of details about trading, because it is a big business, and there are millions of people who are doing swing trading and day trading and investing. There are millions of people in the world. Some people, they just read the news or read information online, and they base their information on that, and that is not sufficient, because they don't give you the general picture of trading. Okay, as trading is different from investing, so you should confuse the three types of day trading, swing trading, and investing, which are different. Okay, so thank you very much for watching this live thing, and hope you enjoy your weekend for tomorrow, which is today. As I say, it's today, Sunday. And if you have questions, as usual, please send me an email. Okay, istockmoney@yahoo.com. You can just send me an email, or go to my website. As always, you find it in any YouTube video, and then you can just check everything I have, everything I have for trainings. And so most of you guys, those who are my students, and those who know me before, they have my training, and they are following what I do and the explanation. And thanks a lot for very listening. Thank you very much, Andret. And I am always near you, which means whenever someone, yes, a live, this live video, it will stay as it is, and you find it online right now when we finish. Yes. If you have just questions, if you are following and reviewing these 3 hours that you have done, if you have question, or you ask question I didn't answer, you can just send me an email, or you can send me an email and I can answer you. There's no problem with that, or something private, because each trader is different. That's why for me, each trader has different needs than the other. Traders are not the same. Someone has a lot of money, someone has little money, someone he know how to trade, someone who doesn't, and there are a lot of stuff like this. So each one is different. That's why I try to answer each individual, each trader concerns only. Okay, he doesn't ask me about other traders, because what's the use of that? Each one should focus on himself and see what are his mistakes, and he correct them in order to become a good trader. Cheers, have a good week, and thank you very much, and see you next week, if God wills, at the same time. And if you have questions or subjects, we can send me an email and we can discuss them. Thank you very much, and have a nice day. Thank you.